Okay, so the company I'm going to talk about today is called TechTarget. Ticker is TTGT. Company has 220 million market cap, about 35 million net cash. They did about 85 million revenue last year. They did 100 million in revenue in 2011, which was the peak year. Basically, what the company does is they have 150 different websites focused on the IT professional. So each website covers a slightly different aspect of technology. So there's like a routing website and switching and business intelligence and database, et cetera, et cetera. And the point of the websites is to inform IT professionals when they're looking to make a purchase of some sort of equipment. Now, the traditional revenue model for TechTarget was they basically sell leads that they get on their websites to the IT vendors. So, for example, they would sell, if somebody would click on a Cisco ad on their website, they would sell that lead to Cisco. But what they've done, which is, very interesting to us, is they developed this new product. And basically what the product does is it data mines, all of the user information from their website. And they have 11.5 million registered users. And they can figure out, based on that information, which firms are looking to make near-term IT purchases. So, for example, they'll figure out that Morgan Stanley is looking to make a near-term router purchase, and of course, router vendors like Cisco and Alcatel-Lucent and Juniper would want to know that information. So, the way they're selling it is they're selling on a subscription basis. They have 60 different categories, and you subscribe to each category individually, and that gives you the right to see the information on a quarterly basis. So this is it's very exciting because basically this is a product that any IT firm would want to have, and they launched the product in February. This quarter, the December quarter, it's going to be about 10% of revenues, and they expect it to triple or quadruple next year. And basically people, the analyst models have them growing 10% in revenue in 2014. We think that number is going to end up being a lot higher because of the new product, and also their international business has grown pretty nicely. And the exciting thing about TechTarget is that they have huge inherent operating leverage because it's a totally fixed cost business. They operate the websites, they have the editors that produce the information for the websites. So basically any incremental revenue dollar, drops to the bottom line. Like their incremental margin is about 90%. So we feel that, as the business grows, their operating margins are just going to explode from where they are currently. So that's basically, that's the idea. We like management a lot. We think, the CEO is a very straight shooter. He actually did a tender for 7.1 million shares at $5 a share a couple months ago. So you ask yourself, okay, why is the stock trading where it is? What's the issue? So the issue basically is there's a pretty large venture capital overhang. Venture firms probably own about 40% of the stock. And with their tender, they bought back part of the venture overhang, but there's still a chunk out there. So what they're going to do is either buy back some more with another tender, or they're going to do a secondary of that stock and get a whole bunch new analysts into the name. Right now, there's basically 2 analysts, so they feel they can get like another 3 or 4 analysts involved with the stock. So this is one we're very excited about. We think the near-term catalyst is, they're going to report their December quarter in early February, and then on that call, they're going to give guidance for Q1. I think guidance for Q1 is going to be a lot better than, the street is expecting now. So that's TechTarget's story. Thanks for listening.